JP Morgan Chase stock is a reasonable bet amid financial sector consolidation. JP Morgan Chase isn't likely to fail despite the turmoil in the U.S. banking sector. Shares of JP Morgan Chase are a good value at their current price. Investors with a contrarian outlook should consider a moderately sized position in JP Morgan Chase stock. Let's dive in. Here's why JP Morgan Chase stock is a safe haven asset to consider now. Welcome to Timely Investment Research. If you're a dyed-in-the-wool contrarian and value investor, JP Morgan Chase stock deserves your attention. The company isn't so over-leveraged on treasury bonds that it's likely to fail. Besides, customers are reportedly fleeing less reputable banks and moving their funds to financial giants like JP Morgan Chase. Not everyone wants to hold bank stocks now, and that's understandable. The collapse of SVB financial subsidiary Silicon Valley Bank and chatter about bank runs have scared some investors out of the banking sector entirely. Yet, the wholesale sell-off of financial stocks may have created opportunities for bold stock traders. As banking customers seek safe havens, an investment in one famous bank might, ironically enough, be one of the least risky ways to allocate one's capital now. JP Morgan Chase and Treasury bond exposure. It's fine for a bank to invest customers' deposits in government bonds, but some banks overdid it and now they're having problems. Under the assumption that Treasury yields would stay low like they did in 2020, Silicon Valley Bank and some other regional banks overleveraged themselves on seemingly risk-free government bonds. Fortunately for JP Morgan Chase stockholders, JP Morgan Chase is a much bigger company than regional banks like Silicon Valley Bank. JP Morgan Chase can afford to absorb capital losses stemming from lower bond prices in 2023. Also, calculations made by Barron's show that JP Morgan Chase's capital ratio adjusted for bond losses at 11.5% isn't excessive compared to the company's big bank peers. Thus, JP Morgan Chase isn't overexposed to government bonds to the point of being in financial trouble. JP Morgan Chase stock is a good value. As JP Morgan Chase reportedly scoops up most of the customers leaving Silicon Valley Bank, investors might observe consolidation in the U.S. banking sector. There may be fewer banks available to customers, but those banks would be bigger and more trustworthy. Hence, we're already observing signs that JP Morgan Chase stock could be a safe haven asset, relatively speaking. Another positive sign is that shares of JP Morgan Chase are a good value. The company's trailing 12-month price-to-earnings ratio has come down to just 10.5x. If a price-to-book ratio of 2x or less typically indicates a decent value, then JP Morgan Chase is almost within the buy zone at 2.05x. And by the way, the company pays a forward annual dividend yield of 3.2%, which ought to entice income-focused investors. What you can do now. Sure, it's alarming to see headlines about the current banking crisis. It's fine if you don't want to delve into financial stocks now. Yet, some investors are prepared to buy when others are selling. If this describes you, then feel free to conduct your due diligence on JP Morgan Chase. It's a gigantic company with deep capital reserves. JP Morgan Chase could benefit from consolidation in the banking sector. Therefore, you might choose to take advantage of a notable value and dividend combo with a share position in JP Morgan Chase stock. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.